Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Rob Viglione. He's the CEO of Horizen. We're going to discuss the fallout of the FTX downward spiral. Rob, it's great to see you as always. Welcome back to Trade Talks.
Pleasure, Jill. Thanks for having me.
And Rob, there's a number of emotions that are around the fallout with FTX, one of them being disappointment. I mean, you were on my show just about 5-6 weeks ago, and we were talking about the underlying blockchain technology for gaming and Web3, and there was a general sense of excitement around the space. I would venture to say almost nobody expected this type of black swan event. So what do you think the impact is going to be, particularly around crypto trading?
Look, I think it's a loss of credibility that takes time to mend. And I think that it just elevates uncertainty in the industry. And we have a bit of a divergence here. On the one hand, we have very interesting technology that really is a kind of a generational shift in the way we do things, the way we interact online. And then on the other hand, there's a lot of speculation around this technology. And the speculation right now is really just in a very volatile, elevated moment where there's, we have no idea what fallout will happen from the FTX news.
So it almost feels as if we're in a holding pattern right now. I mean, there isn't even any clarity in terms of what's going to happen with FTX specifically, but investors and traders have to be questioning, are my assets being held in the right space? Can we trust these exchanges? Because SBF, he was really, the knight in shining armor for the crypto trading space. And again, that's why I associate disappointment as one of the emotions that we're facing here. I mean, he was looking for regulation and working with the SEC and so forth. It's highly disappointing.
It is disappointing for sure. And I think that this is one reason clearly why we're seeing major exchange outflows right now, but it also presents another huge opportunity for the industry to think about how to solve this. And there are technological solutions where you can have more cryptographic certainty around types of transactions and self-custody and so forth. And there's also regulatory solutions where regulators can come in here and provide more maturity to the industry, which I think they should.
Right. And that's interesting because I would say, the guests that we've had on the show covering FTX with me, that really has been the central theme here. This is a wake up call for regulators and it's time. I mean, the market infrastructure is there, right? I mean, there's a number of market infrastructure experts who came from traditional asset classes to build the crypto space. But, is it a function of the technology is just evolving so much quicker than regulators and legislation can keep up with it?
I think that's exactly it. And let's also keep in mind, this industry is roughly just over 10 years old right now. So a brand new industry, less than 10 years old, and it's moving at lightning speed. So I think regulators are trying to do the best they can, but I think now this is really, it should be a wake-up call that pay more attention to it and let's mature things quickly.
And we're also hearing FTX be called a Ponzi scheme. Would you say that that's really what it was? Or was it just somebody not managing the risk, over levering an asset where really debt should not even be a part of the equation there? Or is it a combination of it all?
Yeah, I for sure would not say Ponzi scheme. I would say that some poor decisions were made, and those decisions, unfortunately, really came home and kind of toppled things over. But no, I don't think that there was malintention, that this was supposed to be a Ponzi scheme and this is an exit for anyone here. I think this was an unfortunate sequence of events where poor decisions were made with customer assets, and the market just ended up crashing the house of cards.
And let's talk about the other side of it, right? The underlying technology. We just covered a number of conferences on the fintech and data side of it. And it's such a positive conversation in terms of how it's being implemented, how it's fintech companies and larger institutions coming together to provide this access to investors. Are you still excited about what's happening within the technology side of this?
Absolutely. So the technology side, and again, this goes to the divergence. The technology side keeps on accelerating, and especially every time that we see friction points in the market, and it might sound a little callous to call this a friction point, but I mean, we see a major problem out there, and there are solutions to it. And this for sure will help the industry mature. It's just really painful in the process, but I'm still actually super excited and super bullish for this industry.
All right, Rob, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.